Okay, well, so today I prepared to talk more practical about how to start investing. So it will be much more practical with advice around investing. I had another event in January about empowerment in general, no, when it was much more for every person to talk about what were their goals and how they will be reaching these goals in 2024. In March, there will be another event. It will be an event on budgeting for happiness. So in principle, every month I come up with one free event and it's a different topic. So today is how to start investing. And questions I will answer today will be, why is it so hard to start investing? I've been teaching women to invest since 2019. So I have my own experience. I have experience of all the people who signed up and all people I worked with, teaching them to learn investing. So I will start with why is it so hard, according to me. Then I will talk about key misconceptions about investing in the stock market. I'll share some essential knowledge to start investing from my point of view, and I'll talk about mindset and habits for successful money management. So the event in principle, it was announced for half an hour. I will talk more than half an hour, but everybody is pretty much welcome to come and go as you want. After half an hour, I will open space for questions. Yeah, so at the end of the first half an hour, so you will have space for the questions. So why is it so hard to start investing? Well, first of all, finance is relatively new and not really a science. No, so we all have relatively little knowledge of finance unless we have a financial degree, and it's really, really difficult for us. Also, because finance is not really one thing, no, but finance, there are different types of finance. And if you studied it in the university or in your second degree, you know that there is actually different types of finance. So it's not, it's nothing out of the ordinary that you actually never studied finance. And there is pretty much non-existent educational industry, because basically, since finance is actually also not really something which existed for a long time, it's not actually a science as if you compare it to other sciences which we have been teaching as a society for hundreds of years. So it's quite normal that there is little of really educational industry. It's all happened very quickly. It's all happened in the last, in the 20th century, actually. Before 20th century, pretty much was not existent. And majority of education is created by financial industry, and financial industry is protecting its own interests as well. No? So in many aspects, financial education is it's written to protect financial industry. So it's not exactly objective. So lots of people have little knowledge and wrong expectations. Nobody really ever talks to us about expectations of investing. It's not something taught somewhere. It's we just hear stories from here, from there. So it's okay to have little knowledge and actually to have either no expectations or wrong expectations. And then we have popular culture, who took financial industry, made it into few movies, and we have very strong association between investing and risk due to the popular culture and the movies we've seen. No? So if we've seen a few movies about financial industry, it's about brokers, risk, lots of money. So it's not really about a person investing, because that would be kind of a very boring movie, actually. No, so the popular culture made investing in something very different from what it is in real life. In our case, in many cases, we were made to believe that investing is not for us, whether because we think that investing is only for people with lots of wealth, whether or we think that it's not really, it's quite normal not to think as a woman that investing is for us. So majority of us, we did grow up with the idea. Our parents did show us because they probably were not investing either. So majority of us never actually were grown with an idea that investing is for us. And there is lots and lots of confusing language. You know? So the industry is full of confusing language, and actually the industry makes it an art to make it very confusing. So that's why all of this together, it's very hard to start investing. And also, it's a very particular industry. It's an industry with low margins, no real value creation. Now, if we think about it, in the other industry, something is actually being made. No, so there is something, a real creation here. There is no really something being created. No, and there is lots of conflicts of interest. No, so it's a very, very complex industry. So what would be key mistakes in investing? I think if we start to talk on how to start investing, let's talk about the key mistakes. And one, and for me, it's most important one, is that majority of us, we start investing with an attitude, I will try. No, it's like, I will try, if it works out, I will continue. And that's, I think, is wrong, because you don't try investing. No? So investing is not something to be tried. It's about learning to manage your wealth. And I think if you just, this will be one message for you for today, from today's event, is don't try to start investing. Don't try to try investing. Try to learn to manage your wealth. And try also to see your money as your wealth. We also, from the financial industry, kind of there is this thing that wealth is for somebody who has lots of it. No, all of us, we have our wealth, and all of us have to learn to manage. So just switching from trying to start investing, but to learn it and to managing our wealth is a very, very important change. So we skip that. And if we skip that, then another mistake would be expectation of high returns combined with little patience. That's kind of also part of this I will try attitude. No, I will do a little bit of something. I expect enormous results. I am very impatient. And well, so this is a mistake, because investing is not about that. We're trying to buy expensive or popular products, no? Because when we start learning investing, we start reading, and we start reading popular financial news. And there is always something popular at this moment. Well, something which is popular is already overpriced, no? Because there is a law of supply and demand. So if something is in demand now, it will be over expensive already, no? So this year, lots of talk about bonds, no? And everybody was talking about that money should be in bonds. As a result, they will go up in price. And every year there will be some industry which will be popular. No, I can imagine that this year everybody wants to invest in artificial intelligence, no? Because it seems popular. Few years ago it was clean energy, it became popular. So everything what is in the news, don't buy it because it will be overpriced, and don't even try doing it because it's too late. No, if everybody talks about it, it's too late. And important mistake is not understanding the cyclical nature of the economy and being scared off at the first market drop. So I talked, like last year, I talked to people, and last year was a serious market drop. The stock market had a drop. So you talk to people and say, yeah, I started a year ago and then everything went down. So I sold it all already, no, because that was going very bad. Well, so this is one of the key mistakes, that the first time the market goes down, you see it, you already sell all your investments, you lose money doing this, and you close this whole thing for yourself. You don't understand that in economy we have cycles and we have ups and downs, and you have to keep investing through all these periods. Another mistake is not diversified, putting all in one product. So this is important mistake. Many people do it. Whether you see your property as your only investment, that would be also putting all money in one product, putting all your money, all your savings, everything in one property and seeing it as your only big investment. Or if you're buying certain products, putting lots of money in one because you saw one opportunity and you decided to do only that opportunity. Not diversifying, very, very dangerous. That's a key mistake. Feeling shy and not asking the right questions. And that I hear a lot, and this is quite normal because if you're not confident about your knowledge, then you feel shy about it. And there are so many things you understand, you don't even want to ask questions. So we go to the bank, we ask them to invest money, they offer us something, no idea what they are talking about, feel ashamed to ask. So we just do it just because they advised us. No? So that's a mistake. There shouldn't be any shame in asking questions. And whoever explains it to you in the language which you cannot understand, it's a mistake of that person. So there is nothing in financial industry which cannot be explained in normal language. So if it's not being explained well, you ask again and again, and you insist that it's being explained in the language which is understandable. Not trusting your common sense. That's also, we all have common sense. And some things we understand it. We understand why is it like this, but some people do it wrong. So sometimes we just have to trust our common sense, not go with the fear, because fear is not common sense, but trusting our common sense. And if something doesn't feel right, it's okay. And forgetting about the opportunity cost. Opportunity cost is something which we are not doing the second opportunity. So not investing, it has an opportunity cost. Not investing will lose money due to inflation. So that's an opportunity cost. If we're waiting for to invest for years and for years, we're losing lots of money because of inflation. So that's an opportunity cost, and we shouldn't forget about that. And every time we invest in one thing, it means we're not investing in another. And we have to compare two alternatives and understand which one is better. Investing in principle is simple and boring, but few people have the discipline. And I always talk about money management and investing. It is the same as regular exercise and healthy nutrition. It's as essential for our health, but it's about consistency and doing the same simple thing over and over again. It's not about running marathons. It's not about eating unhealthy for a really long time and then just doing one diet. It's not about that. It's about doing regular work continuously through all our life. And that's why it's so important to learn, because it's for our whole life. Managing our wealth is a lifetime job. It's not something we just do once in a while. It's the same, and even if we see our finances in order, and that's a danger, lots of women, see our finances more or less in order, so we don't pay attention to it. No? We are very busy, we're doing something else. We are not investing because it doesn't seem urgent, but long term, we are losing. And we are losing, and women, we have much less wealth than men. And it's very important for us to learn to invest and to invest over all our lifetime. So Another thing to remember, investing is like doing sports and healthy nutrition, just little steps, long term. Each time we see the importance of wealth management. And now I see I missed the T in the letter. Very, very important. So forget the word investing, think about wealth management and think of this importance and how and all the mistakes I said. So key rules of finance. Money should work. Yeah, so we cannot have money which are sitting there. No, so all our money should be working. Whether they are bringing us a couple of percentage, whether they bring us a healthy percentage, but all money should be working. Risk cannot be avoided. No? But there are ways to diminish it. And one way of diminishing risk is diversifying. So investing in different things. So that's the way to diminish risk. Not investing, we are not avoiding risk because we are losing money through inflation. So money which is not working are being lost. And if you hear about inflation, you know we have high inflation right now in all countries. So this is how much money you lost last year by not investing. So this is a risk, this is a serious risk. So investing risk we avoid through diversifying. There is a power of compound interest. No? So if we invest in products which compound, which bring percentage over percentage over a long period of time, this is where we win. No? So we are not winning with looking for something magical and then doing nothing, and then another huge opportunity and then doing nothing. No, we're investing in something which gives us compound interest over many years. Another important rule, you cannot outsource your wealth management. No, so you can hire professionals, but it is your responsibility to know what is happening with your money. And that we do it by acting, by monitoring, by analyzing, and by improving. So we have to know what is happening with our money, whether we use a financial advisor, whether we use banks, whatever products we buy, it is our responsibility. Nobody is doing it for us. Banks are not hospitals, that I always repeat. They offer us products, and it's up to us to understand which products they offer and to ask the right questions. Financial advisors, also, there are different types of financial advisors. Many of them are not independent. Many of them offer us products from one financial institution with a rather high fee. So financial advisors are not doctors either. Again, they offer us different products, and it is our responsibility to understand which products they offer us and how much fees we are paying. So what can we do? First of all, it's very important to learn to feel at ease with numbers. I think that's very important, and that's one thing which stops lots of women from investing, is that we are not comfortable working with numbers. It comes also maybe from because we didn't like math back at school. Maybe we have a degree where we were not really working with lots of numbers. So the only thing you can do is develop confidence by progressively exposing yourself to numbers, little by little. So, and that's work, and you do it little by little. And also the one message I want to transmit is that investing is not something we can do like this. No, you have to be prepared that it probably will take you close to a year to learn, to start, and to be comfortable with this. And that's fine. No? So there is nothing wrong with taking some time. Learn to use percentages versus absolute numbers. No? So this is essential. So you always use percentages. If you're not comfortable with percentages, learn being comfortable with these percentages. But investing is about percentages. Understand and measure return on investment. So in my, I think, January newsletter, I sent information with explaining what it is. If not, you can find it in many other places. but you really have to learn to measure return on investment on the top of your head. And it's one of the things you always have to understand and have it for anything. No? So how much money is bringing you per year? No? How much profit you're making on your money per year? This is return on investment. So you have to know it. And always pay attention to the management fees. Again, I sent a newsletter about management fees. This is the first step. Every product has a management fee. You have to understand it, and you have to choose products with lower management fees. Management fees of 2% kills your profitability. So there is no product which justifies 2% management fee. So don't have it. Improve your knowledge about investing. You have to invest time in learning. And there is lots of different ways to learn. But without this knowledge, you will not have confidence. Without confidence, you will not ask the right questions. You will not dig deeper. You will not dare to do things. So knowledge is very important. Start talking about finance and investing. So you made the step to come here and to listen today. This is good. Talk to your friends, talk to other people. So start talking about it. This is also how you build your confidence and how you check your knowledge. Now, if you learn something, you explain it to somebody, well, then you know if you understood it or not. Incorporate new habits to dedicate time to your wealth management. And wealth management is not only to looking at your costs. So it's a very good step. But wealth management is understanding, for example, what pension provisions you have right now. It's looking at your pension and understanding how your pension is growing year over year. And it will take you time to understand, but once you've done it, you will feel good. You will learn a lot. Looking through the products, looking through the names of the products, there is lots and lots of research you can do. Lots can be just by Googling, just by learning, talking, asking. So this all takes time. This is part of your wealth management. And then what is very important is monitoring and managing our emotions around money. Because we all have different emotions, and finance and investing bring something from the past in us. So monitor it. Maybe even have your financial diary. So if every time you open your bank account and it brings something with you, with some anxiety, well, write it down and reflect what is happening. Maybe talk to somebody and ask what is happening. Why do you think it is like that? And maybe you have to do it more regularly. And once you do it more regularly, you see that there is nothing really wrong there. So it's something from the past. We have some money blocks, something what parents told us. Well, reflect on your emotions and see whether this is emotions you have to carry or whether you can leave them. Also to understand whether it's your emotions, your thoughts, or they're coming from somebody else, and again, you can leave them. This is about financial confidence. Stock market is tangible. And this is one thing what I hear a lot, and that's why we have this also endless discussion between real estate and the stock market. And real estate is tangible. Stock market is like a casino, it's not tangible. Well, these are all companies which are in the stock market, and you can buy one product which has all stocks of all these companies together. And if you look at the logos, you see that these are products and services. You are paying lots of money for these products and services on a daily basis, actually. You can see how many companies are there, you trust, you might be even working for one of these companies. So how come the stock market is intangible? Well, it is intangible for you at this moment, but with understanding and with learning, it will be tangible. this is the first part of my talk. So if I can summarize, when we want to start investing, we have to understand that this is a longer process. So it's not something that we just do like this. We need to work on our knowledge, on our confidence, on our habits. We have to see it as a time and effort to learn to manage our wealth. And if we do all this, then already our expectations are very different. In the second part of the presentation, I will talk a little bit more in the concrete steps, what we can do. But I just wanted this moment mention about my program, because I know some people came here also to understand what the program is about and how it works. The program Investment Accelerator is actually the program where we work three things. We work knowledge, mindset, and habits. Because when I started the program back in 2019, I thought, well, I just give people knowledge, and with this knowledge, people can invest. No? And we started with knowledge, working and trying to start investing. And as I worked with different women, it became clear that it's not only about knowledge, it's also about mindset and also about habits. So I started adding more and more content and work also more and more different content which people can adapt to their situation, make it more individualized, because this is program where you learn to manage your wealth long term. No, so it's not a program where you just make your first investment. This is to teach you to manage all your wealth long term. So it takes time. You do lots of homework with your own money, because this is also everything which you do for yourself for the future, and it will serve you for years. You will bring your finances in order, and I provide you with tools to do that. You will work on your financial plan. You will understand the stock market. So I give enough content for you to understand what is it about without making it too complicated, without making it too much. You will build your investing strategy and you will start investing. So all this is in this program. To summarize, you will learn to manage your wealth long term. The program is a hybrid because there are live classes, there are recordings, there are home assignments, there are different templates. So you can attend live classes, you can skip live classes and just follow the videos and the assignments. Live classes are for you to hear more things, to ask questions, and you have personal consultations. So everyone who attends the Investment Accelerator will have a personal consultation, because from what I noticed, it's very important for everyone to really start. No? So you need time to reflect, you need somebody to discuss it with, and I serve as a person with whom you can discuss, with whom you can clear your doubts, who can give you some ideas. So, and also some people just need somebody to motivate them. So that's why the program has recorded classes, templates, live classes, and personal consultation. So this is what I wanted to talk about in the first part of the presentation. If you have questions, I'm opening now for the questions, and then later on I give a little bit more content. So let's see if there are any questions. Or comments or anything. I don't see anyone, so it's difficult for me to see if anybody is here or everybody is gone already.
No, we're here listening so carefully.
Okay. Well, Isra, you did Investment Accelerator. So what can you say?
I would say, yes, this is like the big data, this finance. There are a lot of things. And I like how you organize the things and how I can find my questions there. it's a lot of information that even I can't go through all of them. And you can rely on the information because this is, as I said, endless, and there are also wrong information all over the internet. So I like how you make the blend of everything, that not just the passive investment, also the active, everything in it, starting gold and the house investment. So all of them are in it. So I like how you give the diversity and then give the confidence to choose and move forward. That's why I find it super useful, and I keep coming into these meetings as well. So every time listening is like refreshing mind, and if I'm missing something, then I remember. And then while we were talking, I checked on my accounts, and then I was like, okay, make little notes. And I like how you make us organize and, you know, block this time. I find it super useful. Block the time in calendar. It really works actually. A couple of times, very small reminders, but it actually works. So these small things come together and make a big impact. I think I strongly recommend the program.
Well, thank you. There was not planned. I didn't invite Esra to come and talk about it, so it's totally so, but thank you. So what Esra was talking is my advice, which I will share here as well, is to have your wealth management day. Once a week, 15 minutes blocked in your calendar. No? And you call it your wealth management day, and you have time blocked, and you actually block it during the working hours. Because during working hours, we can call to banks, we can do something which usually in the weekend is impossible. So great, thank you so much. I have a question from Catherine. If I also talk about bonds, yes, I explain about bonds as well. Anything else? If there is nothing else, then I will continue talking. So any more questions? No questions? Well, then I will share that the program can be purchased here. You can look also through the dates which are there. And the ones who purchase today get 30 minutes extra consultation. No? So with the program, there is 1 hour consultation. If you buy it today, you get 30 minutes extra. So you have 2 consultations. No? So you have pre-program consultation and the one you take during the program. Okay, so what else did I want to talk today? Actually, I have still quite some stuff to go through. If you are not yet bored to listen. Okay, so this we covered some of more rules of finance. One rule of finance: 1% is a lot. And it sounds maybe stupid, but we are used that in real life, 1% is actually nothing. But in finance, 1% there or 1% up or down really makes a difference. So when we talk about management fees, 1% is huge. When we talk about return on investment, 1% is huge. So in finance, we fight about decimals. So just pay attention to it. So for those who are beginning, who are looking at the numbers, well, 1% a lot is really a lot, and you really fight for 1%. You fight actually for 0.1%. Any investment which is offering more than 10%, when we talk about investments, when we talk about percentages, we talk about annual return investment. No? So 1% per year. So 10% per year, it's a lot. So any product which would offer you more than 10% means it is risky. When we talk, for example, about cryptocurrencies, and we see there some promises of returns which are astronomical, more or less, Well, it's because it's astronomically risky. So anything above 10% is risky, and we really have to think long, what is it about? Here we talk about, I show very quickly the compounding. So I said that one of the mysteries and magics of investing is compounding. So here, for example, we're looking at 1,000, which is growing and 10% annually. So when we have, it's in the first year, we get 100 extra. So 10% of 1,000 is 100. In the second year, we will get 10% already over this 1,100. So it will be a little bit more. So it is 110, for example. In the third year, it's just a little bit more. And this is how the compounding works, so that every year this extra is just a little bit more. And that's probably most of you understand. But the real compounding actually starts after 15 years, after 20 years, after 30 years. You see, after 30 years, it already grew from 100 extra per year. In the 30th year, this extra per year is 1,500. So the longer you keep money compounding, not taking them out, but keeping them there, growing, this is how you keep growing your wealth, leaving it there. So this is very important. So look and prefer for products which stay there for a long time and bring you compounding, not products where you got some percentage, you receive this percentage at the end of the year, you paid tax off of this percentage, and then you have to start doing it again. So this is, if you break the compounding, it doesn't bring you so much. If you keep it there, you keep it going, this is how you grow your wealth. So that's why also you have to start young. If you start young, whatever you're doing, just keeping there compounded, it works very well. If we are not so young, doesn't matter. You need to keep it there for 10 years to see the real results of compounding. And this is how the money grows if we are compounding it over 20 years. So here you can see that 10,000 compounded over 20 years at 8%, it grows to 60,000. So this is what you can expect from compounding investing, but not from small opportunities here and there. You cannot outsource your wealth management. Again, I repeat it because it's very important, because I hear a lot expectation that it can just happen. Somebody will do it for you. No, nobody will do it for you if you don't have the right questions and if you don't watch and analyze and monitor what is happening with your money. And now, very important understanding, two types of investing. We have active investing and we have passive investing. And everything what we hear about in the news, everything what we watch movies about, it's about active investing. It's continuously buying and selling stocks of different companies. And so lots of people have actually expectation that if they invest, they have to buy stocks of different companies, they have to choose the stocks, and that seems very overwhelming. You need to have a certain strategy to do it. And it has an objective of winning the market. So this is all about active investing. Active refers to selection of stocks. So and also doing it actively and doing it all the time. So this is active. What we never really hear about, or we hear very little, it's passive investing. So if you want to learn about investing, you actually have to research passive investing. And passive investing is buying and holding a fixed assortment of stocks known as an index. And it's complicated to explain to you just like this, so I mention it here. So if you want to research it yourself, then you can research it. And research passive investing, research what is an index, and understand that this is the way to start investing. So that the foundation of your investing always have to be passive investing with indexes. It can be described as investing in the market. And market brings good results, long-term and brings very good results. So just doing this for a regular person is enough. How can it be done? So again, when we invest, normally we come across by either buying shares, so active investing, buying shares, or the mutual funds, the normal mutual funds, which any banks will offer us. So usually if we just go and ask for some investing through our bank, maybe through our financial advisor, we usually get mutual funds with active investing, where there will be different stocks in one portfolio chosen by a manager, and these stocks are being again bought and sold in our name, in that fund. So this brings high fees. So all active investing is actually bringing high fees, very laborious, and actually not so efficient. So it is very, very difficult for anyone doing active investing, and also for professional investors doing active investing, earning enough money and winning the market. While in the passive investing, we have two products. One is index fund, and another one is ETF, or exchange traded fund. And these products have much lower cost. You don't have to do trading. So it's only buying and holding these products for a long term. It brings better results. It has low cost. It's much easier, but it's not profitable for financial industry to offer us these products. So the moment we actually ask somebody to buy it for us, they are not so interested, because nobody except us is making money. They are not making money buying us these products and holding us this product. The whole industry makes money on buying and selling stocks, on buying and selling mutual funds with high fees. So these products, whether they are better for us, but they are not good for financial industry. So we are not getting them actively offered. We are getting lots of misinformation when we hear about them. So that's why it's not really common, and nobody will really push us these products, while other products are actively pushed to us all the time because the industry makes money. So how should you invest? You have to learn and build your confidence. You don't invest in what you don't understand. So it sounds as a common sense, but it is like this. If you cannot, on my website also you can find, there is a question list. If you're investing in something, there is a question list. Fill it in to understand really what you are doing. So that you it's a checklist for you to understand what kind of product it is and whether it makes sense or not. Try to minimize management fees. So again, this 1% I'm talking about, it will destroy long-term 25% of your savings. And so if we have a product which charges us 1% extra, long-term, we will lose quarter of our wealth. Choose passive investing versus actively managed products when you are building your first investment. Just go for passive investing. It's much safer. It's for the long term. It's much cheaper. It's really what you have to start with. And choose and create some kind of automatic system with monthly contributions. Because this has to be a habit. Your habit should be to save and invest, to save and invest. It has to be monthly habit. It's not about doing one thing, putting all your savings in one thing. No, it has to be done every month, little by little, through all your life. That's, I think, one of the most important things. So just build a system instead of trying to make it like big jobs. Find the right community or accountability partners. It's very important. So it can be one person, it can be your partner, but maybe not. It can be your friend. well, come and talk at our events. But it's important to have certain support, not to feel alone. If you feel alone, it's rather difficult. Well, this is what I wanted to share today, and there is still time for questions. I see there are people still in the room, so then I hope somebody will ask something. Well, and otherwise we will just finish within the hour as announced. Any questions, any comments? Is anyone there?
So for me to find out about the programs, I need to go in that link that you gave me. Is that right? That you put on?
Yeah, in the link I gave, you can purchase the program, and you can read more information there. And in principle, it's divided in 5 big units. So there will be 3 live classes. So we will start on Monday, first Monday of March. We will start with the first kind of kickoff of the program. But if you don't join the live kickoff, you just receive an email with all the videos. You have access to the Google Classroom, and Google Classroom will have all the classes, will have home assignments, will have templates, and you start learning and working on your finances. So then there are 2 more classes where you can come, you can listen what I have to say, and you can discuss your own progress, because you get different home assignments for yourself. You don't have to do them, but if you do them, you progress more. And you have a personal consultation with me, so you can decide when you book it. So majority of people book it more at the end of the program, when you're kind of already ready to start investing. The cost of the program is €247, including the personal consultation. Yeah. And again, if you buy today, you get 1 consultation extra. So you could start with a small consultation first, that we kind of define your goals and everything, and then you follow the program, and then you finish. So the program brings you to having your strategy and to starting investing. So the purpose is that you start investing.
How much time is required to do the program, Lina?
You work on your own finance. So the learning materials, I think the learning materials you have probably around with 10 hours of learning materials.
Yeah.
But then I don't know how much time it will take for you to work on your finances. So because it's up to you how much you want to put time on.
Yeah, I'm a finance manager, so my finance should be quite sorted.
Quite so. Well, then if you're a finance manager, then you probably, so it's probably even less than 10 hours work.
So for me, it's more like confidence in how to invest, because I have invested, I have been investing anyway. But I'm not making much money because I'm a bit fearful. It's like mindset, how to go for things. Obviously, that comes with knowledge of, that confidence will comes with knowledge. I have quite a good knowledge already in the finance sector and so on. But about investment, I'm still like, obviously, it's so hard to make money. You don't want to go and lose money, if you see what I mean.
Yeah.
So we ended up going for the safest options, which doesn't give us, the better interest, I would say.
Well, so yeah, so you learn. I think you learn. It covers passive investing, a little bit of active investing, covers real estate. It covers different, but it gives you different tools. So
yeah. So you said
look through the page, read what is on the page, so you kind of have the content, and you're very welcome to ask me more questions.
And you said that it starts in March.
The first live classes in March.
So is there any some content to be reading about beforehand?
You can, you will get access to the program from the beginning.
Okay.
But the program kind of goes in stages. So,
Okay.
so if you attend the first class, it will be kind of a kickoff. No, so because I try now. I used to just give lectures during the classes. Now I think it's more about discussing things, motivating, so making it more interactive. No, so that we have some things to discuss. More, not only me just repeating what I can have shown on the video. No.
Yeah. Yeah. Okay. Okay. I'll have a look at what you sent to me. And then if I have any more questions, I can get back to you.
Mm-hmm. Okay. Okay, so I have a question from Catherine who says, people who work to you gain more and more knowledge. Have you seen them start working with a management company? I know they have a fee, but I'm wondering if the goal sometimes is after you've built your knowledge and confidence, then you're ready to work with a broker or have an individual investment account. Exactly. Absolutely. Actually, people who works with me, many people who work with me, they already work with a management company. No? But like after the classes, after doing some classes, they come there, and then the people who give them advice say like, "What happens to you?" No, like you really now ask very smart questions. You know? So yeah. So depending on the size of your wealth, you probably don't want to invest it all by yourself. But you definitely understand better what is being done for you, and you can be much more critical.
Okay, that's helpful. Thank you.
You're welcome. Okay, more questions? No? Well, if there are no more questions, then I think I will thank everyone. And I hope to see you maybe in the program, if not at other webinars. And I hope you enjoy my newsletters. And if you have any more ideas or questions for the newsletters, for the webinars, please just send me the message.
Thank you so much, Lena. It was very helpful again. See you soon.
Thank
Bye.
you. Thank you. Bye. Okay, thank you, Ramesha. Well, thank you. Thank you for attending. I hope you liked it. Thank you. What else do we have left?
Lena,
Yes.
can you hear me?
Yes,
I will
I can.
need
Yeah.
to, because this is new for me, I don't want to just jump and sign up today. I'm really determined to do this.
Mm-hmm.
I've been looking to this for quite some time, but because of my job is so demanding, and I had quite a few big projects, which I'm finishing one now in March. So I did not have the headspace to really have another thing adding up to everything else that I needed to do. Do you see what I mean?
Yeah.
But I really want to do that. And I think our program is really good. And I'm interested in buying it, but I'm concerned about March, because March is a month that I'm finishing a particular project that I will need to put all my time into that, if you see what I mean. So I
And
don't
maybe
know.
you don't need the live classes, Grace, no? Because some people want live classes because it kind of, they have to work to something.
Yeah.
No, they need me, you know, to be there. So so if you are determined and if you know what you want,
Mm-hmm.
then you just follow the program without live classes, and you have your private consultation. And actually, if you buy it today, you have 2 private consultations, no?
Yeah.
And you always can buy more private consultations in addition, no? So from what I see, for people who really are determined, they don't have issues learning by themselves,
Yeah.
Then you go through the program on your own terms, no? So you learn what you need, you have private consultations, and it's probably enough, and not, well, if not, maybe you need more private consultation.
Yeah. But what I'm saying to you is that, like, today, I had meeting the whole day long. I don't have the headspace to go and read all the information and watch your videos. What I want to ask you, can you give me a week for me to really look into this? And then I will buy your program, let's say in a week time, when I had the time to look at all that. And then if I have any more question, I will come back to you and say, Lina, blah, 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 blah.
Okay, good.
And then obviously I want to keep my two
And you want to give you
consultations.
30 minutes extra. Okay, yes.
Of course, yeah.
Okay,
Yeah,
you
because
negotiated.
I think that is important. When I really have the picture in my mind, this is how much I have, and I want to invest in this. And then I want to have that conversation with you, because obviously you will have the understanding in terms of